Welcome to another insightful episode of the Contractor Business Builder podcast. So job costing, it's not optional once you've passed 2 million in revenue. Without it, you're guessing on every bid, every hire, and every yes to the next project. So today we've got Caitlin Brock. She's the finance manager at Apparatus Contracting Services. How you doing today, Caitlin?
Doing good. How are you?
Doing great. Excited to dive into how contractors can learn how job costing and proper accounting is so important. It's really kind of the dashboard, the gauges of like how you're doing as a business and making decisions. So important. You've been with Apparatus for many years, been in accounting world for many years. What does precision accounting mean for contractors?
Yeah, absolutely. The eight years I've been with Apparatus has allowed me to see through quite the lens of what's normal, what it looks like and what those goals really are at the end of the day. And what it really comes down to, we like to think of precision accounting being a standard, that's what every client aims for. But the precision accounting really comes into, everything is accounted for all the time. That nothing gets slipped, nothing, is, oh, we won't worry about that. We're just going to ignore that. It's not that important. Everything is important in the financial world. So precision accounting really does come down to everything being accounted for all the time, as well as just on time. So it's not helpful ever from a business standpoint to be looking backwards to not have true numbers until, 2 months from when they were valid. So it's really having that real-time data flow that everything is accounted for across the board in every account, all banks, all credit cards, everything that might be business related, that it's all really in the books and knowledgeable about where it is in the books.
Yeah, for sure. I think not having like that precision accounting up to date can often lead to bad habits for contractors too, where they just kind of like don't look at their numbers because they know they're not overly reliable. They've got, a pile of
Yeah, if
receipts
it's
or
outdated or
it's
it's
just,
not,
yeah.
they know it's not real,
Mhm.
why would they make a decision off of a number that they know isn't true?
Yeah, but essentially like that is what you need to be doing as a business owner to making sound financial and strategic decisions in your company. So what do you find are some like blind spots for contractors in that like 2 to 6 million stage of business, things that they're not aware of, not looking at, get forgot or missed or whatever?
I would say a big blind spot is indirect costs. So it's very apparent cost of goods sold. Contractors know what they bid, what it's going to cost them, what materials, supplies, vendors, they very much know what that on-site job really costs. It's the unseen costs that really add up. So that's a big blind spot of, using your equipment that then needs service, that needs fuel, that needs to be repurchased. All of those expenses are part of a job cost, but it's not as easily built into budgets, getting customers to understand that that's part of their budget. Those are kind of hidden that then really add up on the bottom line if they're not taking into account labor burden. So everyone knows, they're paying their guys $20 an hour. That's easy to account for. That's easy to bid for. But what about liability insurance, all the extra costs of employing a team that really do have to be part of the cost, that just because your jobs are profitable, if you're throwing all of that into overhead, now your overhead is significantly higher and you're not really building it into the profit margin of the jobs. So indirect costs, huge blind spot that really are part of job costing just as much
Mhm.
as, getting new drywall put in, flooring put in, those are costs. So are the underlying ones that really add up.
For sure. I find often when we have, new clients come on board that just the structure of their accounts aren't even really set up that they're looking at, cost of service goods sold, whatever you have, and then their overhead where they've got things sort of mixed up, or as you mentioned, there's certain things where maybe there's haulage charges or something that are like for multiple sites and they just kind of get thrown in the mix and overhead, but really they should be, expense for jobs or vice versa or what have you. So having that sorted out, very, very important. Now, there's a lot of components that go into job costing. I know contractors who say, we do job costing, we know how much expenses we have per project, but it's always a little bit gray as far as like how accurate it is and how that information, like where the information came from and what the process is. So what are some of the components to doing proper job costing and keeping it accurate?
Yeah, I would say the biggest component is having everything, I consider having a home. So the biggest part of job costing is knowing that all expenses are related to jobs, that if it has to be broken down further, getting into those more detailed categories. So it's much harder to do job costing if you're doing general buckets. We use that in the accounting world, absolutely, for P&Ls, and it's subcontractor labor, materials, supplies, tools and equipment. Those big buckets make a lot of sense in the overarching, but when it really comes down to job costing, the only way you can really refine those is for especially the team, mainly the team. So those project managers, those laborers, that whenever they're making expenses, whenever they're running the cart at Home Depot, those getting to the much more granular buckets, drywall or framing or even just the miscellaneous, because that adds up. So really being able to put all of those buckets into job costing helps that bigger picture of if the jobs aren't as profitable, that helps focus in on maybe what is truly costing extra and what is expected cost. So that's where I look at it being the most effective for job costing to get to the actual goal of that higher profit margin, because big bucket saying, oh, my materials are over. Okay, great. But where within those materials are over? Because you can't really make changes off of those larger numbers.
It can be a refining cycle for a contractor where when they do have proper job costing by specific, items of their estimating, they can then look back at a project or even mid-project and, we went over on this or under on that, and they can adjust their future estimating to continue to get more accurate numbers and realize where their profits or lack of profits are coming from and make adjustments, as well as just knowing which projects or client types and things like that are going to be most profitable to then pursue, more of those or mitigate for them. I know there's definitely a big pain point around how do we get everything accounted for, as you've mentioned. So you've got site guys, maybe they're running to Lowe's or Home Depot, grabbing some materials here and there. You maybe have a guy, getting deliveries dropped off. You got receipts hitting the inbox and all this kind of stuff coming in. And then how does that all ensure that things get tracked and categorized by project and item?
Yeah, a little bit of that is client dependent. So we see certain things in practice where clients come to us where they just have that box on the desk and they really hope that everything has some scratch marks on it and it's got the right notes and it's, hey, that was for the Main Street project for this, and we're going to just manually do all of that. That often we see. Obviously, that does not work for us. We are fully remote and need something sent over. More often than not, really to make sure all of that is cohesive, is employing some third party platform. We've worked with a variety of them. So it's really employing the one we most commonly use is called adaptive.build. And that's a very high end expense and bill management process. So that's where either documents come via upload, via email forward, and it parses that document to find out what the job was. If there is any sort of granular memo lines that talk about framing or plumbing or electrical, pulling that information, but it always is linked back to different users. So that's the biggest thing, is getting the team on board, whether they're including it in the notes or writing it on the document. But at the end of the day, then it is a matter of having that open communication line with the project managers, the guys that are running to Home Depot, that if they aren't sending it in, that there is a kind of be all end all, you still have to tell me. So if you avoided it the first time that receipt came around, that you're going to get a copy of it. And our team is going to bug you over and over again until we finally have a home. So it's not going to just say, okay, well, that was 2 weeks old. We're not going to worry about it. It's still going to be on the forefront of our needs a job cost and needs a project. So it's really just tracking it down and creating a system that works for our clients that says, if it doesn't have a job, okay, here's the card it was used on. Was it this laborer's? Was it this project manager's? Whose card spent it? So that's who we're going to chase down. But ideally getting into a workflow of uploading receipts. It's going to fly out the window at some point. So let's just hope that they take a picture of it right when they do it. And that's more of a client, very client specific, of creating those good workflow practices. So that comes down to kind of owner operators really making it a point to say, hey, if you have a company card, you have to be doing XYZ to be successful for us as a company. So then it's really just in getting into best practices from a management point of view to get the team on board.
Yeah, definitely a bit of leadership and management and just good old, making sure you follow up and getting people on board. As you mentioned, there is like an ideal way of that everything flows and people upload the receipts, but it really does come down to specific businesses but as well as specific people. I know working with a company a while back where project manager is responsible for approving all, expenses and things like that, but the site guys were responsible for uploading a receipt and at least tagging which job it's for. And there's always one or two that either have like a stack of receipts in their truck from like 3 weeks back, and then at the end of the month when accountant or whoever's going through it, they've got to bug them, and then they're sitting there for an hour just taking pictures or whatever, and it seems to always be the same guys. But yeah, you have to help your people understand that this is what we're doing. Just we take a picture right when the transaction happens, you stay on top of it. It's easy instead of like having this backlog and then you got to catch up and just kind of waste everybody's time. But yeah, that's great. Now, as far as the owner of the company, how involved do they need to be? Like for me, ideally, the way I look at it is project manager is responsible for expenses for projects, and anything that falls through the cracks, they should be dealing with or figuring out. But obviously, the owner needs to be involved to some degree. How do you see that, like the roles there, I guess, between, owner or general manager and project managers?
Yeah, I would say, kind of like you mentioned, it really is a little bit company dependent. And I say that lightly because the larger scale companies that have an owner, maybe and an office manager, it's unlikely we're even liaisoning with the owner that much because they're quite far removed, because the office manager is the one getting us the information. They have access, to log in and pull bank statements and pull all, the vendor information. So at that point, the owner might not be as involved because it's really just, coming in on, oh, okay, the owner just has to approve budgets or something like that. But for smaller scale companies, we might meet with the owner every other week, because they're the ones actually approving bill pay and they're doing that workflow. So really just client dependent. Again, we can't enforce, I would say, project manager wise as much. So that's really where the owner or the GM might be the biggest step in, is if we're not getting the receipts, we're not getting the bills coded, if we're really having issues or pushback from,
Mhm.
those spending the money, if you will, that's
Yeah.
really where we lean on the owner or GM to say, you have to get your people on board. It's your money that's not being categorized. So have a team huddle, have the meeting, get get them on board. So again, a little bit more dependent. If there's an office manager, some sort of office staff that is handling more of that admin side, we may not be meeting with them near as much because they have somebody they can liaison. And if
Mhm.
it's not that as big of a company, the owner might be quite a bit more involved because they want, or they just like to be hands-on. If an owner really wants hands in meeting with us every week, and they don't just want our financial reports and packages, they want to talk to us about it, get a little bit deeper understanding, then they're going to meet with us, as much as they desire. But if they'd rather just look at their monthly CFO tool set and be happy there and let their office manager get us all the data, then it can be as hands off as that.
Yeah, that's great. Now, as the owner of the business or senior management, how often should they be kind of looking through the financials, do you feel? And what sort of the key numbers that they should be tracking on, weekly or monthly basis?
Yeah,
Mhm.
overall, on a, weekly basis, depending on the report. So on a weekly basis, the owner should at least be keeping an eye on the AR and the AP just to see that flow of what is upcoming in the pipeline as far as revenue, what's upcoming as expenses, just to keep eyes on it. There aren't really many big decisions made on a weekly basis, but it's seeing that in real time, seeing any anomalies or a large bill, because we can't vet that information. If we see a large bill come through our desk, we kind of take it at face value. We may know trends and we're going to, say, hey, this is double what you usually pay this vendor. But, the owner is going to be the one that comes back and says, you know, we shouldn't be doing that much for that project. That's unexpected. So it's looking at the overall picture, but the really important information is that monthly basis. That's where we're going to look at cash flow forecasting. Really helps them get an idea. Do they need to pick up on sales? Could they buy a piece of equipment? So really looking at those larger picture reports on a monthly basis help an owner make true business decisions versus saying, oh, the P&L looks good, or things are tracking really well for the year. I'm happy, and that's important. We want to keep it in front of them. But those higher level monthly reports are really what it comes down to of decision making from an ownership standpoint.
Yeah, wonderful. If you have, let's say, like a newer client that comes to you and their profit margins are tight, or they're like, I need to, improve my profitability by, a couple percentage at least. What would be some of the things that you would look at from a numbers perspective or suggestions for them to improve profitability purely from like financial statements that you look at?
Yeah, I would say, the biggest thing is making sure all costs are accounted for. So to, improve that job site profitability, are there things
Mhm.
that aren't being accounted for? Do you write things off because well, that wasn't that much. That, we just grabbed that from the supply, we just grabbed it from the shop. Making sure that stuff is at least acknowledged. And then
Mhm.
more than anything, I'd say the biggest thing is tracking overhead. A lot of clients will be surprised at how much things add up that they just put in the overhead bucket. So if the bottom line isn't what it should be, it's, twofold of looking at that profit margin. And then some clients will come to that say your overhead is as lean as it can be. It looks great. And, your profit margin sitting at that 30%, which means if you want to bring home more money, if you want to do more owner draws, you just need more jobs. We'll have those conversations with clients, once things are lean and they look good and their margins are, industry standard, then it really is talking through you need bigger jobs, you need more jobs because what you're doing is working. You just need more in the pipeline. But it
Yeah.
really is, tracking both sides of it. It is that cost of goods sold. Are you on budget? If you're doing, is on budget, but are you underbidding? Looking at things like that, that just because you're on budget doesn't mean that it was the right budget. So those are all things to consider to make sure that that profit margin is where it needs to be.
Yeah, definitely. Now, you guys work exclusively with QuickBooks. What other software do you find needs to be in the mix for job costing, or have you used with clients before? What's the kind of the software stack there?
Yeah, I would say the biggest kind of couple that we work with, Builder Trend is a large one we work with all the time, and that one does lean a lot towards kind of custom builders, large scale remodels. So it does have a lot of bells and whistles. We like the bells and whistles, but it's not always a right fit for all companies. But we do see that one often being used. Job Tread is another big one. Not as complex to get into. The learning curve isn't as high.
Yeah.
Jobber and Rezio. Rezio is a little bit of a simpler one, which we do like for our clients that are kind of up and coming and want to get something that can be customer facing and do a little bit more. QuickBooks is pretty basic when it comes to any sort of customer interaction. They're going to send an invoice, it's going to look basic. There's no sort of job tracking. So that's where those outside software especially get customer facing to make things look a little prettier, do a little bit better follow-ups. But those are some of the main ones. We've worked with Procore. Procore is definitely on that more builder trend, the level of more complex. It can work
Mhm.
really well for our clients, but it really depends on how much they're willing to learn software wise, as well
Yeah.
as get their team on board. If their team has been doing manual handwritten invoices or on a spreadsheet, getting them to
Mhm.
join a software can be a little bit of a hurdle. So it's a matter of finding one that's going to work for our clients and,
Mhm.
use what their goals are. Are they looking for highly complex scheduling and change orders? Or are they looking for, pretty basic job tracking and, draw package invoicing? What are they going for to really help determine what software is going to be their best bet?
Okay. And what about the labor hour tracking for site guys? Like that's a big part of job costing. We've talked about the expenses, materials, subcontractors, things like that. What about the labor hours on site? What would you suggest for that, or how do you keep that, like, track of that?
Yeah, so oftentimes that is paired with whatever platform. So most of them have some sort of time clock feature. So a lot of our clients will just utilize that because a lot of the project managers, they already need a login to do change orders and to kind of have that, photo upload, document upload for progress along the jobs. So oftentimes those have time clock features. QuickBooks does have a time clock feature that can work well if, they want it to pair with that. And then they don't usually work as well, but they're payroll providers. So we work with a variety of payroll providers, ADP, Gusto, Paychecks. Some of them do have inherent time clocking. Those don't get very job costing. So most often we steer our clients back to whatever platform they're using for kind of the budgeting and job costing. Then is what we keep the hours in. So then that's where Apparatus jumps in and we have kind of the view access to both of them. So that's where we take over and say, okay, we're going to pull kind of the time clock summary per job, what their hours are allocated for all of those jobs, and then pivot that. We'll pull all the payroll summaries. So, gross wages, employer taxes, benefits, whatever else may come. So then we're going to combine all of that data to do that job costing into QuickBooks based on, where we can get it from. So we do require our clients to make sure they're getting us the information, however we need it because that's half the battle is we need to see
Yeah.
the visibility to be able to put it in QuickBooks.
Right on. Yeah, I know. I mean, obviously there are these kind of one-off solutions that can be good for specific contractors, but often the less software you need, the
Yeah.
better and the more, streamlined it'll be. Because even if the office team is like, used to using different softwares, it's the field guys you got to think of, right? And if you're like
Mhm.
asking them to use multiple different softwares in the field, it's going to be a uphill battle, I'll put it that way.
Yeah.
Uh, so can you tell us a bit of like a client story, a client that got started with you, what the kind of issues or pain points they had, how you guys helped them and the kind of trajectory and stage that they got to working with you?
Yeah, one that sticks out to me, and this is just it doesn't happen all the time, but a client that came to us that virtually was just running out of their checkbook. That does still happen. It surprises us a little bit, but it's my bank balance looks good, everyone's happy, jobs are getting done. So coming to us saying, "Hey, I've never done really any sort of bookkeeping. I just, come up with my numbers at the end of the year to file taxes, and that's how I've
Mhm.
been operating." So, they came to us like that. So we get them on QuickBooks Online, get them going. And it was really cool to see the embrace of technology. So getting them into QuickBooks, they were running payroll just through a local firm, cutting, checks to their employees based on pay stubs. So it was a very basic, functional, what is it? Funny term I heard recently was a cowboy construction set of books. So it's working, but it's not organized. And with
Yeah.
that, getting him to a point that using QuickBooks, and they actually, started using JobTread because we were able to talk them through how that can benefit them and, get their customer facing, not using, Excel spreadsheets for invoices, and then we moved them to Gusto for payroll. So it was really cool to see them really be able to utilize technology and make decisions based on actual numbers versus whatever they've manually inputted in their information. So that was a cool
Yeah.
success story to bring somebody, fully integrated with today's day and age of technology and what works. A
Mhm.
lot of our clients we just see being able to get out of the number crunching. So a lot of our owners are, they'll come through and they're really involved. They don't want to be involved. They don't like it. So a big part of the transformation is being able to trust apparatus. And we see this time and time again where now they just meet with us on a weekly basis. They do their month over reports and they're not worried about the day to day anymore. They don't have to, put that extra brain power. They can focus on sales or managing their team or hiring, whatever, all the other things owners have to do. So a big part of, being with apparatus is getting that bandwidth back of whatever allocation had to go towards what we do, whether it's managing the person doing it or doing it themselves. We kind of take that holistically over and take that burden away from our clients.
Yeah, wonderful. I'm a, firm big believer in bookkeeping and financial help being like one of the first things that contractors hire out and get off their plate. First, because many of them just aren't trained or don't know how to do
Yeah, I mean, that's not what
bookkeeping
they do. That's not what they like. That's not what they're good at.
and
So, them doing it
Mhm.
is just not realistic.
Yeah, exactly. And then the thing is, because it's usually not urgent necessarily, so it gets pushed off, right? There's because they've got, multiple hats to wear, so the bookkeeping just sort of falls by the wayside. So hire it out, get in contact with apparatus. If you aren't doing books or you know that they're not accurate, because that's another thing too. When you know your books, as you mentioned, aren't accurate, you're unlikely to really pay attention to them or trust that you can make sound decisions on them. So for people out there that know they need help with their books to get organized, to be precise, what's the best way to connect with you and the apparatus team?
Yeah, absolutely. Our website's, the best place to go. So apparatusteam.com, that talks about what we do, how we do it. There's a live link on there to book a meeting with me to talk more about our services and how they fit in with potential clients and, what they're currently doing, what's not working, what's working, and really diving into all that directly with me. So that get on my calendar is kind of the best way to get in front of me. So we can talk about, if apparatus is a good fit to bring somebody kind of through it and, get them on the other side of the clarity.
Wonderful. So yeah, reach out to the apparatus team. We'll put links in the description here to the website. Go check it out. Analogy I use is you're driving your ship or your car blind essentially if your books aren't in the right place and you're going to end up going off the road. So definitely get some clarity there. Thanks so much for coming on, Caitlin, and sharing your insights today.
Yeah, absolutely. Thanks for having me, Dirk.